Hello. Welcome to another episode of the Forex Podcast. This is episode 3. The good, the bad, and the ugly. Trading habits that we have as traders. We have good habits, then we have some bad habits, and sometimes we have some ugly habits. And those that are blowing trading accounts are generally those that have very ugly habits. In this episode, I'm going to identify what these habits are, the good habits, the bad habits, the real ugly habits, and I'm going to teach you how to overcome the bad and the ugly habits. You might surprise yourself. You might have more good habits than you think you do currently. So let's get started. Welcome to this episode of the Forex Podcast. So let's go through these habits in order of the titles. Let's go through the good habits first, the bad habits, and then the real ugly habits. Obviously, the good habits are the habits that every trader should develop. Number 1, always set a stop loss. I know that's extremely obvious, and it might seem a bit too simple as a place to start, but always have a stop loss when trading. That is a habit of setting a stop loss. Traders that set a stop loss are generally doing one of two things, or both of these things. Number 1, they know how much they're risking per trade. So when you set a stop loss, you know your position size, hopefully, so you know how much you're going to lose if that stop loss is triggered. They're also doing something else, and that is they're preventing themselves from letting their losses run. So when a stop loss is triggered, they're out of the trade, they've made a loss. Without a stop loss, that trade could potentially run, and that loss could potentially keep growing, and they could have this huge losing trade. Always set a stop loss. You've probably heard the phrase, keep your losses small and make your winners big, or something along those lines. Well, always setting a stop loss and a take profit, and we'll perhaps touch on that a bit later on, but always setting a stop loss is a sure way to stick to that piece of advice, is a sure way to keep losses small. If you always set a take profit, that's a good way to make sure that your winners are big, that your risk rewards are healthy. And that's something else that we could mention off script, is risk reward ratios. A good habit is to ensure that all trades that you enter have healthy risk reward ratios, that the potential reward is always, every single time, always bigger than the potential loss. What's another good habit that you should have as a trader? Taking regular breaks. The wisest traders take frequent breaks throughout the day. I'm really rubbish at this. Okay, I'm not giving this podcast with the intention of letting you think I have all these good habits and none of the bad. There are some good habits on this list that I really struggle with, that I don't currently have as a habit, and this is one of them, taking regular breaks. I do have bad trading habits, and perhaps we'll come to that a bit later on. So the wisest traders take frequent breaks throughout the day. They also take vacations from trading, and I do that. So I go on holiday twice a year for a whole month. Whole of August, I'm off. Whole of December, I'm off. I do not trade whatsoever. It does me a world of good. Having regular breaks really helps to be less emotional when trading and less attached to trades. It has a big impact on trading emotion. And something I'll talk about later on is how a lot of bad and ugly trading habits are actually born from trading emotion. And trading emotion is a whole topic by itself, and there'll be an episode on trading emotion in this Forex podcast at a later time. But taking regular breaks, going on holiday, it really refreshes my perspective and makes me such a better trader. I suggest you do the same. Take a break many times throughout the day. Take regular breaks from the charts. It really does minimize emotions. It really helps you to feel better. Go for a walk, have some lunch, play some video games, pick the kids up from school, whatever it is. Have a break, go to the gym, go for a swim. Live that trading lifestyle. If you have those breaks, it will have a positive impact on your trading. Obviously, you need to schedule them in so you're not missing trading opportunities because you're on a break. But saying that, a break doesn't have to be very long. A 5-10 minute break every couple of hours can do you a lot of good. Another good trading habit that you need to develop is sticking to entry and exit rules. Really, this whole podcast could be summarized by saying, have a detailed trading strategy that gives you an edge and stick to it. Because that is the recipe for trading success, isn't it? Having an edge, having a set of rules that provide an edge, and then trading the edge. I could pretty much tell you that and not create any more episodes of this podcast. But to break that down into smaller bite-sized chunks, we have lots of episodes, but for the purpose of this habit, let's just focus on the entry and exit rules of a strategy. A fantastic trading habit is to always enter and exit trades as per your strategy criteria. Don't divert from the trading rules. Once this is achieved, further strategy habits can be developed. This is like a foundational habit that you need to have. If you're going to follow any trading strategy, at least stick to the entry and exit rules. And that would generally involve having small losses and big wins, because most profitable trading strategies have that approach. Another good trading habit, it's not just good, but a trading habit that's essential. All these good trading habits are not just good, they are essential for becoming successful in the Forex markets. Spend time learning. So it doesn't matter if you've been in the industry for 6 months, 6 years, or 60 years, always spend time learning. Any professional will always continue to learn. Read books, watch videos, go on YouTube, read articles, watch Bloomberg, read the Financial Times, whatever it is. Always seek to be increasing your knowledge of trading and the markets in general. I love trading books. I love the occasional trading video. Both really help me to have new trading ideas, update me on industry changes, things that are happening in the Forex markets, and they just generally help to motivate me. They give me these new ideas. They give me some inspiration, some motivation. I really love trading books that are inspiring, these autobiographies and biographies about traders that have come from very little, that rags to riches story. I think of things like books like Reminiscences of a Stock Operator, Pitbull, How I Made $2 Million Trading the Stock Market. Those sort of books I find very inspiring. So always spend time learning. This is another habit that I do struggle with. I should put more effort into learning. It would do me a lot of good. Another good habit. Trade the same time every day. So the amount of people I've trained in the past who have a full-time job or are students, I understand those things can get in the way of trading, obviously. And if you have a full-time job or if you're studying for your education, those things are far more important than learning to trade. But, if you are studying, if you are working, still have a set time every day where you trade or learn to trade. One of the biggest challenges that I have with my students when I train them is getting them to actually trade. They're tired when they get in from work, or they've got kids that are demanding, or other commitments. I totally understand it. I have 4 kids myself. I'm a busy man. There's lots going on. I totally understand it. But without that consistency, you're not going to progress at the rate you need to as a trader. And you might not see the results that you need to from a trading strategy. If you're trying to trade a strategy and you're doing an hour one day, 2 hours the other day, no hours the next day, sometimes in the morning, sometimes in the evening, sometimes it's over a lunch break, your results are going to be a lot more random than if you were to trade the same time every day. So that's another good trading habit to be in. Always risk the same. Something else that requires consistency. The best traders don't just know their risk per trade. They also have the same or similar risk for every trade. So keep your loss consistent. My risk does not change once per year. So if 1% of my account balance, say 1st of January of a new year, hypothetically is $100, it will be $100 throughout that whole year, no matter the loss or the profit I make throughout that year. After a year, I can then re-gauge that. So I might want to bring my risk down or up. But once again, it will be a certain percentage, and whatever that monetary value is at the start of the year will be the same throughout the rest of the year. Socialize with other traders. This is another area where I've really failed. I wish I had developed trading friends, and perhaps this is a dream, this romantic dream that doesn't really exist in real life, because a lot of these online trading communities, you don't really develop friendships. Sometimes they're just frustrating, and some of the things that people post can be quite annoying and not very beneficial. But I wish I had a online community of traders that I could share ideas with. It would have really helped me over the years, and would help me now, because it can be a bit lonely. I'm the only person that does this in my house. I have my office at home and I trade every day, and it's just me. There's no one else here. Obviously I train people, obviously I have a trading room, and I talk to people there. People email me and have questions, but it's not the same as having someone that's on the same journey as you that you can bounce ideas off. Great for beginners, but also great for experienced traders. So there's some of the real key good trading habits that I think that you should have. Always set a stop loss. Take regular breaks. Stick to your entry and exit rules. Spend time learning. No matter where you are in your trading journey, always seek to be learning. Trade the same time every day. Always risk the same, and try and socialize and interact with other traders. So here we go. Bad habits. I've already mentioned it. Number 1. What's the first habit on my list for bad habits? Not letting winners run. This is a big one, and this is why it's number 1 on my list. As mentioned earlier in this podcast, there is that popular piece of advice that's saying keep losses small and make winners big, or something along those lines. Traders can get themselves into a very bad habit of actually doing the opposite, of making their losses big and their winners small. Sometimes they keep losses small and winners even smaller, so it doesn't really matter if their losses are small, their winners are even smaller. To prevent you from closing positions early, I really suggest you check open positions less frequently. It really goes back to taking those breaks. The more you check the charts, the more you check your floating profit and loss, the more emotionally attached you're going to become to the trade. So check trades less often. You really have to let your winners run, and the main reason people don't is because they've become emotional. And I'll mention trading emotions a bit later on in this episode of the Forex Podcast. Risking too much per trade. Too many traders risk too much per trade. They do this in two ways. Number one, they don't set a stop loss and let their losing positions run. I touched on that earlier on. Number two, they do set a stop loss, but they're risking like 5% of their account on the trade, or 10% of their account on the trade. Sometimes the whole of their account on the trade. There's not even any point to the stop loss. So don't risk too much per trade, and always have a stop loss in place. Overtrading, another bad trading habit. And there are two types of overtrading really. The first is opening too many positions and trying to trade too much. So being too active, really a trade per day I think is good enough, even if you're day trading. The whole scalping approach generally just becomes very emotional and leads to lots of losing trades. So try to trade less often. Another way you can overtrade though is spending too much time in front of the charts and not having those regular breaks. So you can exhaust yourself through just trading too much, not necessarily opening too many positions, but just looking and being too engrossed in trading. It should be something that's fun, not something that takes over your life. I really suggest you follow a detailed trading strategy, because that would include your entry and exit. It also include other things like when to take breaks and things like that, what hours you should be trading, what to do if you start feeling emotional. A trading strategy is not just about you're going to buy here and sell here. It should include things like risk and when to take breaks, when to trade for the day. It should cover everything. Another bad habit, trading due to boredom. Trading can be slow at times, and this is something that I've seen lots of newer traders struggle with. Sometimes the markets barely move. Other times they do move, they are active, but your trading strategy doesn't signal any trading opportunities. So what this leads to is traders taking these boredom trades where they want some action, they want to make some money. That obviously backfires and they end up losing money, but they are trading because of boredom rather than this logical trade based on their strategy rules. A lack of detail in a trading plan. So you might have a trading strategy, and I touched on this a moment ago. You might have a trading strategy and it might cover your entry and exit rules, but it might not be as detailed as it should be. A trading strategy should provide a plan for each and every day, trading day that is. It should entail when to trade, what to trade, how to analyze the charts, what to look for when entering a trade, what to look for when exiting a trade, where you're going to put your stop loss, where you're going to put your take profit, how much to risk per trade, what to do during major news events, what to do with positions if the weekend is approaching, what to do if you've had 5 losing trades. It should cover everything and anything. The more detailed your trading plan is, the less room there is for emotion and confusion. So have a detailed trading plan. As mentioned with the good trading habits, there will be more bad trading habits, but these are the most commonly bad trading habits I come across. And if you could just overcome these things, you would see a great difference in your trading performance. So the ugly. These are trading habits that you have to stop immediately. These are the trading habits that will lead to a blown account. These are the trading habits that will lead you to throw your keyboard or your mouse across the room. Don't do any of these things. If you are doing them, you need to stop doing them. Number 1, trading without stop loss. And I know we've come to this many times in this episode already, so I won't spend much time on it. But if you trade without a stop loss, you are going to let your losing trades run, and that ultimately is going to lead to massive losses and ultimately failure. Revenge trading. You've taken a hit. Perhaps the last 3, 4, 5, 6, 7 trades were losing trades. It's so frustrating when that happens. It's time to take revenge by doubling up and entering any sort of trade, just so you have a chance of recuperating your losses. Guess what? It all backfires and you lose even more money. Revenge trading is emotional trading. Going back to those emotions, and I touched on this in the last episode about risk management. Trading psychology comes up over and over again. I'm thoroughly convinced that 90% of trading issues really comes down to trading emotion, and you can link lots of trading topics, if not all of them, to your emotions and trading psychology. Whenever you trade with emotion, expect there to be negative consequences. Sometimes trading with emotion can lead to short-term gains, but it will always lead to long-term failure. I suggest taking a break each time a trade closes, whether it's a profitable trade or a losing trade. That can just help your mindset to reset. If you've had 3, 4, 5, 6 losing trades and you're taking breaks in between each of those trades and thinking about things logically, you're a lot less likely to revenge trade. Opening trading accounts with unregulated brokers. Trading with unregulated brokers, that's Forex brokers, increases your chance of being scammed. And this happens way more than you think. People here in the UK, in the US, throughout the world are scammed by these fake Forex brokers, and they lose a lot of money. They do this for a number of reasons, or any of the following reasons. Number 1, a lack of industry education. They just don't know that the Forex broker is unregulated. They might not even know that there is such thing as a regulatory body for brokers, or a financial regulator that regulates brokers. So they have a lack of education, and because of the lack of education, the lack of awareness, they're drawn into this scam. Another reason is greed. A broker promises them huge returns, and they let their greed get the best of them. So they choose to go with the broker purely based on greed. I'm going to be rich. I'm going to make 3,000% this year. Another reason is leverage. So well-regulated brokers generally offer much tighter leverage. Here in the UK, FCA regulation means that brokers generally can only offer 1 to 30 leverage. A trader might not be happy with that, so they want 1 to 500 leverage, or even more sometimes, so they go with an unregulated broker. Just don't do those things. And perhaps there'll be an episode later on in this podcast, or perhaps in the Forex show, where I'll go through brokers and what to look for in a broker, so you can have a trustworthy broker. Here is another big one. Are you ready for this? Is this you? Strategy hopping. Welcome to the Losers Club. This club, being part of the Losers Club, really means you're in the Losers Circle. What is the Losers Circle? It basically means you start off by learning or creating or buying a trading strategy. You trade it until you lose some money, You give up on the strategy and then start the circle again. You go and learn a new strategy or buy a new strategy, create a new strategy. You lose some money, you start again. So many people have been in this loser's circle for years. That's not an exaggeration. And it's not really a circle, it's a spiral. Because as the circle goes on, they lose more and more money, they become more and more frustrated. Ultimately, they give up in the end, feeling hurt financially and probably feeling hurt emotionally. It can take its toll on people. Do not strategy hop. The main reason people strategy hop, once again, is emotion and their expectations. And I'll come to that very soon. We've got one ugly habit left. Trading news events. This is just simply gambling. Just putting a bunch of money on a trade, expecting a positive figure or a negative figure or interest rates to rise or to be cut or whatever it is. You're simply gambling. If you gamble, you're going to lose. As simple as that. As mentioned with these other habits, the good habits and the bad habits, there probably are other ugly habits that I could have listed and brought up in this episode, but these are the real key ones. So how do we break the bad and ugly trading habits? Or how do we prevent making these things habits? Number one, education. Know what you're doing. Don't jump into having a live trading account until you really understand the markets, you understand your trading strategy, you understand your broker, and you're happy and comfortable with your broker. Educate yourself and take your time before committing to anything. Just doing that by itself will prevent some of these ugly habits from appearing or these ugly things crystallizing into a habit. Number two, have a trading strategy and stick to it. Have a mindset that when you learn a strategy, when you buy a strategy, when you create a strategy, you're going to trade it for at least 6 months. That is your commitment. I'm going to trade this for 6 months and then I'll decide what I'm going to do. In 6 months' time, perhaps the trading strategy needs tweaking. Perhaps in 6 months' time, you're not seeing the results you want, so you can try something else. 6 months is a good time as long as you are trading the strategy for those 6 months. You need 6 months of live trading data before deciding what to do next. And hopefully you've had a good 6 months and you think, I'm going to stick with this. Another tip. Become more capitalized. I honestly believe that a lot of trading emotion is caused by people trying to make too much money from such small accounts. You're not going to make $5,000 this month from your $100 account. That's just not going to happen. That's an exaggeration, but I think you understand what I'm trying to say. You need to have more realistic expectations, and probably you need to continue to learn and save until you have a more decent sized account. Trading with more money, as long as you're happy to lose that money and are financially able to lose that money, trading with more money can give you a much more professional mindset and approach to trading. When you're trading with very small amounts of capital, lots of people don't take it as seriously as they should. They risk far too much, or they're expecting far too much. And once again, it just ultimately leads to failure. Use strict risk management. My previous episode is all about risk management. Go and have a listen of that. And then the last one, this is the biggest one. Overcome your trading emotions. A lot easier said than done. But what I will say in this episode is this. A lot of trading emotion, that's negative trading emotion, comes from expectation. with false trading expectations comes huge psychological trading challenges. A lot of emotion is based on expectation. You're expecting to make X amount of money this month or this week or today. The higher the expectation, the higher the emotion. You're expecting this trade to be profitable. You're expecting this one to be a winning trade. You're expecting to make money from day one. You're expecting your drawdown to only be 5%. You have all these false expectations, and when those expectations are not met, because they never will be met, you become emotional. The best way to prevent these bad and ugly trading habits is to have realistic expectations. Thank you so much for listening to another episode of the Forex Podcast. All support is appreciated, and I really do wish you all the best with your Forex trading.